We continue the story on Greece, and we need to look at the canaries, the various canaries in the coal mine. Jane Foley of Rabobank gives terrific perspective on linking in foreign exchange into the political economics that we see in Greece. And yes, with Spanish spreads widening out to where they've been since October as well. Jane, the great talk here is about increased volatility as expressed in the euro. Have you ever seen the short-term vol now that we see in the euro?
Well, yes. I mean, clearly, to be honest, I think if you go back until Friday, you might even say, well, why is it the euro reacting a lot more? We know that we are in the 11th hour when it comes to this Greek deal. And actually, the euro, I would say, has been holding up really quite well. Now, there could be a variety of reasons for that. Perhaps it's because the market is a little bit tired of all the volatility in bond markets over recent weeks in Europe. And that, of course, has been driven by a lack of liquidity. But maybe the market is still quite hopeful that there will be a deal, or maybe there are flows coming from Eastern Europe too. There are politics going on in places like Poland and in Turkey. We could be seeing the euro supported by that sort of news.
And Brendan, there was a pro brilliantly explaining this linkage between the price of the euro, the level of the euro, this new volatility, and the lack of liquidity that is perceived to be out there.
Jane, we've been talking about the value of the euro all morning, and one thing that I've been trying to figure out is the market waiting on the right deal on Greece, or is it just waiting on a deal, any deal?
Well, I suppose it's a little bit of both. I mean, it depends if you're looking at the near term or the further out perspective. And I think in the near term, it's got to be just any deal at this point. And there have been some quite interesting stories this morning on the Bloomberg wire, and they've been saying that there might be some opposition parties that would be willing to vote along with the Prime Minister to put a deal in place. Now, of course, we know that the Greek government is a far left government. Within that party, there's a very extreme far left faction, and they have been very unwilling to accept anything that goes against the electoral promises that the government made back in January. So some of the opposition parties may step in, give the government a majority if it goes with a compromise deal, which would push through more pension reform. The very far left don't want that, but at least there could be a deal on the table. So that, if you like, is a glimmer of good news today. But even so, we still don't have that deal, and until that's done, I don't think that there's cause for any celebration.
Vonnie, did you hear that? Jane Foley of Rabobank gets her news from the Bloomberg wire.
Of course she does. Jane, if there's capital controls, if they need to be implemented, does that actually support the euro?
Well, I think if we got to the point that we would have capital controls, it would be for Greece a very sad situation, and particularly in the fact that a lot of the smart money is no doubt already left the country, and it would be more ordinary people that suffer the inconveniences and the stresses that capital controls would bring.
Right.
Now, if we got to that situation, it would mean hard times ahead.
Okay. Jane Foley, thank you so much with Rabobank on short notice here. Of course, the drama continuing in Europe.